color. So, big news, Berkshire Hathaway investing in Google. It's actually a very Buffett-esque investment. People don't realize that though, which I will go over. So let me pop open the last time we covered it on the channel. Let's see. Was it July? Wow. It's been a while. I didn't realize it was that long since we covered it. Okay. But more so the financials. That's what's really interesting with our old pal. So I have to update it for 3Q, Lo Ciento. But let's take a look at the 2Q numbers. Let me share that. Boom. Screen. Window. Yes. So this is the model from the last time that we covered Alphabet / Google. So this is actually what a Warren Buffett was looking at. And also full disclosure. So people are like, oh my gosh, Buffett invested in Google. No, he didn't. Greg Abel invested in Google. Buffett invested in Constellation Brands, but which they have a 7.6% position in. But this is definitely 100% Greg Abel. So Buffett likes to see return on invested capital greater than 15%. And if you look, LTM 2Q25, 28.2. But here's the more important thing. I mean, this is just bonkers. It has gone up every single year since 2017. So their returns on invested capital for Alphabet / Google have quadrupled as of LTM 2Q25 relative to 2017, which is just mind-boggling that they've been able to do that, especially at their size. I think that's the thing that's really fascinating when you look at a company like Google, and frankly, all of the Mag 7, that they're able to generate such amazing returns at their relative sizes. So this is just pretty wild. So again, this is going back to the model that we did. I have to update Alphabet for 3Q. It's in the hopper, but you see the returns are just mind-boggling. Really incredible. They've quadrupled since 2017. And that's also while, let's see what they've done rev-wise. So this is the 2Q. So this is the LTM 371 billion relative to 2017, 110 billion. So they've more than tripled their top line and they've quadrupled their returns on invested capital. And all their margins have expanded tremendously. So it's kind of a no-brainer. Their revenue is advertising, not impacted by tariffs at all whatsoever. So pretty not surprising in the grand scheme of things. But that was one of the big revelations. They're like, oh, Buffett invested in Google. It's like, no, he didn't. Greg Abel did. So let's see. We got some friends in the chat. Where's the chat? There's the chat. Boom. Hello. I have been well. I've had some major travel issues thanks to the government shutdown, which is not shut down anymore, thank God. And happy to be with all of you. Yes, I do remember you. It has been a while since you've popped in here. Good to see you. Yep, 13Fs have been very interesting. I was just covering Alphabet / Google there, Buffett investing in it, Berkshire Hathaway investing in it. It's now Greg Abel's show. So don't be surprised with any of the moves. I think that's what's going to happen on a going forward basis. They're going to be like, Buffett invested in this. It's like, no, he didn't. Greg Abel did. Buffett definitely invested, 100% definitely invested in Constellation Brands, and they've maintained that position. Little Fiji. I love Fiji water. Oh, crypto. Hold on. Crypto's popped into the chat, literally. Crypto. Yeah, crypto's gotten kicked in the teeth, namely Bitcoin, but it's to be expected. And if you believe the long-term thesis, then it presents a buying opportunity for sure. And it doesn't just go up and to the right always. And this is where, if you're disciplined, there's plenty of opportunities. We covered Celsius in last week's video. I topped off my position in Celsius. It's obviously pulled back significantly, but that's to be expected. So you dollar cost average into it. The last time I had bought it, it was at like 22. So this is the first time. I mean, I'm buying it after it's gone up 100%, but I totally believe in it, especially the fact that Alani Nu is now entering the Pepsi distribution network. I think it's just total no brainer. When we first met during that live stream, I bought 5 companies: 1 Air France, 2 Nokia, 3 BlackBerry, 4 GoPro, 5 Corsair. Okay, interesting. And Ubisoft. Huh. Evian water is great. I agree. The only reason I'm not drinking Evian is because I finished my Evian and now I've got Fiji. Maybe at some point they'll sponsor the live stream. Brought to you by Fiji. I think both are excellent in terms of drinking water. I would say I probably prefer Evian, to be quite honest with you. Evian's very good, but Fiji's not bad either. I don't mind Fiji. Natural artesian water. Dun, dun, dun. Let me put on the... I have this chili pad that cools down the computer, and it looks like it's not connected. That's why it's not cooling down. I'm like, man, my computer's running pretty hot. So while I wait for all the amazing comments to come in, I'm going to pop this in the back here. Bear with me a moment. Okay, there we go. Now I just had to find a USB for it. There we go. All right. Computer's cooling down. It was like pretty hot. I was getting a little worried there for a second, but we're back. So fire away any questions, comments, concerns in the chat. Oh, it's updating. Now they're all popping through. Views on Bill Gates selling 65% of his Microsoft. I think Bill's, looking at other things right now. I mean, that is a pretty significant amount for sure. But I think at this point, he's on the back end of the, as we call it, the back 9 of life. I mean, I'm trying to think how old he is. I think he's like my dad's age. I'm actually curious. I don't know offhand. I know he's definitely in his 70s. Bill Gates. He's 70, on the nose. October 28th. Happy belated birthday, Bill. I mean, that's not like necessarily a negative to me. I mean, I'm trying to think when the last time Bill Gates was CEO of Microsoft. It's got to be a decade. When was Bill Gates last CEO of Microsoft? Let's see. 2000. So he remained Microsoft chairman and chief software architect until 2008. So I would argue it's been pretty long time for him to, decrease his exposure to Microsoft. I don't look at that as a negative. I'd say Buffett, he's in his 90s and he still has Berkshire Hathaway, but he's still very much the face of the company. I don't think Bill Gates has really been the face of Microsoft for a pretty long time. So I don't personally look at that as a negative. I think he's also signed up to the pact with Buffett and all the other billionaires that they're going to give away, pretty much all their net worth. So I don't look at that as a negative. I still think Microsoft is like the best play of all the AI companies if you want, a sure thing, so to speak. Again, this isn't financial advice. I'm not a financial advisor. Ubisoft stock is completely frozen for unknown reasons. My stocks are in limbo. So I'm glad you brought this up. I think right now people are like, oh my gosh, volatility in the market. So we've seen everything just kind of go up and to the right. I would say like Liberation Day. That's when it came down and then it just kept going up and to the right. So I would not use that as like an indictment. I would say this is an opportunity. Like a lot of stocks have come back into like a more normal range. I haven't even looked today, but I know like Palantir was coming back down to earth. Frankly, I'd like for that to come down even more. Yeah, it's not. 170 is kind of like the bottom there. It seems it's not going below 170, but there's a lot of companies out there that are well ahead of their valuations. Yeah, Nvidia's pulled back 186.60, and it's not a bad thing. It's a good thing. The market needs this from time to time, and I would say 10% pullbacks, 10, 15% pullbacks. I'd rather have those every so often than everything gets out of control and then we have like a 40 to 50% pullback. Those are no fun. But I don't think, your stocks are in limbo by any stretch. I mean, if you're buying at a discount, you're buying below the intrinsic value, you're going to be fine. Again, you have to focus on the long term. As long as you're focused on the long term, you're good. Ken, are we screwed? I don't know if you're talking about Michigan State or if you're talking about stocks in general. All my stocks are down 30+%. Yeah, I'm in the same boat. So, it's an opportunity to dollar cost average. A wise man once told me, one of my mentors said, always have minimum 5%, ideally 10% of your portfolio sitting in cash so that you could take advantage of opportunities like this. I'm going to look at some of the names. Meta is definitely in like OMG territory, where it might have even broke through 600, but yeah, I'm in the same boat with you. And that's, oh no, it's 602. I think a lot of the stocks right now, Albertsons is ironically better than it was. But yeah, everything's kind of been sliding. Let's see if there's any other big ones. Ironically, Alphabet, Google, that's up today at least. What's holding strong? My Joby's gotten kicked in the teeth. That one's been dying on the vine. Constellation Brands is up slightly. Go figure. Tesla is up slightly. Yeah, it's a bloodbath. It's red everywhere. Yeah, everything's down. But again, this is where you can take advantage. If you really think about it, you could take advantage of anything in your portfolio that you honestly think is a long-term play. And I think this is also an opportunity to get into things that are overvalued. Like I'll be brutally honest, I sold out of Nvidia at like 156. It was above my bull case, and I was just like, I can't make heads or tails of this. This makes no logical sense. So I wouldn't mind for that to pull back to hop back in. Yeah, I think it's a good opportunity actually. Yeah, MSU, MARP. I mean, Rutgers is holding on, but we have to win one of two against Ohio State or Penn State. Penn State's the last game. Ohio State is going to be a massacre. So that's the only chance we've got it going to a bowl game. And if we do go to a bowl game, I could pretty much guarantee it's going to be the Pinstripe Bowl. Let's see. Have you heard what has happened with Ubisoft stock? Honestly, I haven't. It's a European thing. It does not happen in the United States, but Ubisoft stocks are literally frozen. Oh. So yeah, we have instances where stocks trade. If they, it's usually like 15, 20%. They'll just like stop trading in it to let the market cool down a bit. But that one I'm honestly not, I'm not super familiar with. But like literally frozen, like you can't get in, can't get out. That's pretty frustrating. Berkshire out here, 50% cash. Obviously, they're playing a different game than us. Yeah. So it's funny because everybody looked at that as like, oh, Buffett thinks that the market's overvalued. I really honestly think he was holding on to that massive cash pile to hand it off to Greg Abel and let Greg Abel invest based on his ideas rather than just continue on Buffett's ideas. So I think that was more of like a nice gesture by Buffett. But I mean, Buffett sold out of Apple, and Apple's just continued to go up. I think when I looked at it, he lost about $1 billion on the sales that he made from Apple. So, whoops. So yes, Celsius. Yeah. So I mean, look, I'm very positive on Celsius, as you saw in the video. I bought more Celsius last week. I think it was at like 44 when I bought it. So obviously it's down. But I think my average cost is like 24 something because I bought it at like 22 when it was like completely in the gutter. To buy a stock that has gone up 100% in 12 over 100% in 12 months, you have to have conviction. So I'm putting my money where my mouth is. What I'll tell you about Celsius is back in 2022 when Pepsi became the official distributor of Celsius, that's when the stock like hit the skids. And what ultimately happened was Pepsi took a bunch of Celsius and then they were like, uh-oh, we took too much Celsius, so they gave it back. So what ultimately happened was Celsius had this like huge ramp in revenues and then it dumped down because they gave back, a bunch of the Celsius. So that's ultimately what happened there. So if you look at the stock, drop 30%, and it's like, what did they report that caused it to go down? The only thing was organic growth in core Celsius was down quarter over quarter, not even year over year, quarter over quarter, 2Q to 3Q. Now, they still had growth because Alani Nu ripped, and then they brought Rockstar online. That only generated like 12 million of revenues. But net, you're in fine shape with Celsius. Is at a massive discount. It's becoming a bigger discount by the day, but I'm still pro Celsius. Celsius has so much room to run. Alani Nu entering the Pepsi distribution network. Here's the thing that you have to understand. A couple things here, which is really important. If you go look at Celsius right now, let's go do it together. Da, 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 da. Let's go look at Celsius. Da, 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 da. CELH. And I'm going to show you something, and this is why the robots aren't taking over just yet. Okay. So I'm going to show you why this makes absolutely no sense, friends. Here we go, Celsius. So if you look, Celsius right here, PE ratio, 335. So again, morons who don't know finance, don't understand valuation, fundamental analysis, they're like, oh my gosh, it's so overvalued, bro. It's so overvalued. So why is the PE ratio 335? By the way, it's incorrect. And you're like, what do you mean it's incorrect? They had a one-time distributor termination fee of like 246 million. What does that mean? What that means is that when Celsius tells their distributors, Alani Nu tells their distributors, hey, we're cutting you guys out. We are going to be in the Pepsi distribution network. They're going to have exclusivity. You have contracts with independent distributors that put your cans on shelves. Those are contracts, just like any legally binding contract. So breaking those contracts has a cost associated with it. Now, here's the other side of the story, and this is where the accounting comes in. So that 246 million, it has to be recognized by Celsius, but it's going to be paid by Pepsi. So when you look at the numbers, you're like, oh, now if you add back those one-time distributor termination fees, which by the way are going to be paid by Pepsi anyways, they have positive earnings. The PE ratio is not 335. But again, if you don't have that ability to recognize that and conduct fundamental analysis, you're like, oh my gosh, it's 335. It's way overvalued. What's going on here? And people lose their minds. And it's like, no, that's not what's happening here. So don't worry about Celsius there. Trust me. Hey, Ken, please tell me what I'm missing with Tesla. Nothing. Not sure I've run into somebody who understands fundamentals as well as you. Well, thank you. And who has bought in so hard to the stock. Thanks. So you're not missing anything. I was very open and honest. My valuation was like 408 and it was at 461 when we covered it. And I said, if you own Tesla, I'm still on Celsius. If you own Tesla, it's a hold. If you don't own Tesla, it's a sell. It's not a buy yet. I think, what did I have? I think it was like under 340, 335 to 340 is where Tesla's at a 20% discount to intrinsic value and it'll be a buy. Here's the thing with Tesla. Humanoid robots, okay, self-driving cars. Now, humanoid robots, the market valuation on that has been approximated at 7 trillion. And self-driving cars, because remember, they have the self-driving car technology. They're going to be able to license it. That's where there's a bleep load of value. I almost said the S word. That's where there's a ton of value. So net, Those two pieces are not even included in any of the valuations, mine, Wall Street's. Now, one person who does include it is Dan Ives from Wedbush. He is like a tech like savant. He's somebody that has been, in tech equity research for like 3 decades. So this is a guy that saw like, Amazon in the 90s and he's like, yeah, I'm in. So one of the things that you have to recognize is if you believe in the potential of humanoid robots, which I do, okay, Dan Ives, and you saw the clip in the actual YouTube video, Dan Ives says within 2 to 3 years, humanoid robots will be in people's houses. Okay. Now, I think that might be a little bit aggressive from a time perspective, but I don't think it's inconceivable. Elon's rolling them out in the actual factory down in Texas. He's getting all the data points, letting them make all the mistakes there so that when he rolls them out, it's going to be, seamless. And net, when you think about it, I think all of us, every single person here, myself included, I would say within the next 5 to 10 years, all of us will have a humanoid robot in our house. Okay. Now, I know you're like, that's crazy. It was also crazy to think that we'd have iPhones when, everybody had flip phones, or to think that we'd be texting when like back in the day, you'd like hit the number, like to get like ABC, you'd hit the number one, like 3 times to get C. So like, this sounds like crazy, but it's here. It's already here. And if you've seen the work that like Boston Dynamics has done with robots, the funny thing is people are like, oh, Boston Dynamics, they've done better. It's like, dude, it's like 10 guys. You have Tesla has the ability to mass produce these things. So if you believe that that is going to be a reality, which I 100% believe it will be, then like the value of Tesla just goes bonkers. Where people miss with Tesla is they look at it like an electric vehicle company. There are no other electric vehicle stocks, with the exception of Rivian, which has a whole other thesis there. But if you believe in the humanoid robots thesis, the self-driving car thesis, which I believe in both, then Tesla is like the big winner in both of those areas. So that's really the key. And, I didn't sell one share. I haven't sold one share, and I'm not going to sell one share. And the only logic to selling would be if it's like an outsized position. So when Buffett pared down his Apple stake, it was 50% of his portfolio. Now, there's a couple counterpoints to that. Add more cash to your portfolio, invest in other stocks, balance it out. But that's really the logic. That's really the logic. Now, if you're just looking at Tesla as an electric vehicle company, I don't see it. I don't see the valuation making any sense at all whatsoever. You also have to remember the energy generation and storage piece that has been on an absolute tear, and also the services. So another thing that gets kind of lost right now, energy generation and storage and services is 25% of revenues, 25%. Now, when you have full self-driving cars, when you have humanoid robots, that services revenue is going to go up that much more. Hey, my humanoid robot's broken. Oh, okay, cool. We have to service that. You're going to have to pay for that. So those are both like recurring revenue streams that are only going to get bigger and more impressive over time. So that's my take on Tesla. Trust me, I'm not one of these like, I think you can already vouch for the fact I'm not one of these clowns that just like cheerleads stocks. I mean, I'm a fan of Tesla because I own Tesla and I believe in the long-term thesis. That's really what it is. So if you hold it and you're like, oh my gosh, it went down. Yep, it went down for me too, big time. So don't worry. BlackBerry is a very successful company that flies under the radar of many people. They're very successful. They make software for cars now. Yeah, I actually knew, or I know, the former COO of BlackBerry, and he was all about like the actual BlackBerry itself. And I was just like, dude, I don't see it. It's like being positive on the typewriter. And the software play makes a little bit more sense. I honestly haven't looked at it in years. I remember it became a meme stock for a bit there, but it's all about the core business. I'd have to see what they're doing from a software perspective, but that's interesting that they're making software for cars. And that's just like a totally different business model for sure. Yeah, I agree with that, Jeff. Celsius should be around 65 by next earnings. you know, I mean, it's even at 65, it's still below its intrinsic value. I think the mean for Wall Street was 65.95. The median is 69. Our valuation was 75.86. And again, I'm using conservative assumptions. Trust me, I don't want to overpay for stuff. So I'm not using like bananas assumptions there when I do these videos. Quite the contrary. I always go like pretty conservative. Sometimes I'm like, oh my gosh, this is like unrealistically conservative. It's like draconian. I don't like doing that because I don't want to like penalize the companies per se. But yeah, I totally agree with you. So Celsius is one where like hasn't been at a discount, like a significant discount for a while. So I topped it off at 44. Yeah, it's at 40 now. Okay, whatevs. But again, you have to see the long-term potential. When I bought Amazon at 178 and when I bought Meta below 500 during Liberation Day, people are like, "You're crazy. You're crazy. Tariffs." And I'm like, explain to me how tariffs impact Meta at all. And it's like, well, oh, Amazon. It's like, yeah, guess what? Who's going to get hit with the tariffs? The companies that are selling stuff from China. And what do you do when you go on Amazon? You look at the reviews, you buy the cheapest thing. Let's face it. So it's not going to impact Amazon's business. It's going to impact these other companies that are selling on Amazon. So it was just like, it didn't take a rocket scientist to really like break that down. Do you know the feeling of buying stocks for what you feel is a discount, and then a few days later the price is even lower than you realize you could have gotten it for cheaper? Yes, I know the feeling with everything that I bought last week. Who's going to be buying these robots if most people in 10 years are below middle class? Yeah, I hear you. Again, so if we can have a quick economics conversation there. So if you look, and again, I'm going to take a U.S. View because that's obviously where I'm based. But if you think about it, what happened with COVID and the stimulus checks was a recipe for disaster, and everybody knew it at the time. But it was a risk that the government was willing to take. Okay, what happened? Massive inflation. Okay, but here's the other problem: everything got inflated. Asset prices got inflated. Real estate's gotten inflated. So now follow the bouncing ball here because this is going to take me a little bit of time to develop. So what has ultimately happened is a recognition that this is not sustainable. Okay, good, thankfully. Now, the debt is not sustainable in the United States, and we piled on trillions of debt because of the stupid stimulus stuff. So now you say to yourself, okay, this is the hand we're dealt. We got 38 trillion of debt. What do we need to do? We need to pay down that debt. Well, how do we pay it down? So let me explain the whole tariff thesis. And everybody like loses their minds, like tariffs, like making fun of someone's mom. It's like, calm down, my God. In the United States, and for basically every country on planet Earth for thousands of years, countries have had tariffs. Like this isn't like a new concept. If you actually go backwards, okay, from the Industrial Revolution until 1930, all right, the US, the only way that it generated income was tariffs. There was no income tax. So for all of those years, we only had tariffs. All right. Actually, going back to the beginnings of the United States of America, there's no income tax. So the income tax came about in the 1930s. All right. So coinciding after the Great Depression, blah, blah, blah. Now, what was the key thesis with the tariffs? All right. You want to sell here, you want access to this market, you're going to have to pay for it. Okay. Now, here's the interesting thing. There's tariffs all over the world. If you go to buy a Ford F-150 in Germany, it's more expensive than a Mercedes. Why? Because of tariffs. Now, follow the bouncing ball here, friends. You're all very intelligent, otherwise you wouldn't be here. So let's think about this. Tariffs. So I put a tariff on your company, which is based in Europe, let's say. You now say, geez, it's more expensive for me to sell in the United States. I have one of two options. I could either raise my prices, not sell as much, eat the tariffs. But then there's also option number three. What if I moved some operations I built in the United States and I totally circumvent those tariffs? That is what's happening. Now, it's not something like you flip a light switch and boom, overnight. But now you see industries moving back to the United States, which had all left. This was the whole globalism experiment, which, by the way, doesn't work. So I want every country to be strong. Every country, like throughout the entire world, should have its own dominion, be strong in its own right, etc. Now, when companies have now begun operations here, you've seen Taiwan Semiconductor, Rolls-Royce has moved here. There's a bunch of, non-US companies that are building in the United States to circumvent the tariffs. what ends up happening? Well, guess what? Your tariff revenue goes down. So you're like, oh, well, then how does this all make sense? Guess what? You create jobs, which means you have more people spending money. Remember, 70% of GDP is consumption. So now you increase that number. And guess what? That's more tax revenue that you have. So if tariffs work, what's ultimately going to happen is tariffs are going to go away because you're not going to generate the revenue from it. So the idea is you make revenue from it. Everybody in the world adapts, they move operations here, and then the tariff revenue is de minimis, but it's overtaken by the income tax revenue, the increases in GDP, et cetera. If you want to learn more about this, listen to Scott Bessent. By the way, the guy is a freaking genius. So again, we are all like cats with laser pointers. Everything has to change instantaneously. And the reality is this, it's not the way it works. It might be more than 3-4 years from now until like all of it comes to fruition. Now, if you listen further to Scott Bessent, what he says is the $2,000 check that everybody's going to get below a certain income level from the tariff revenue, combined with the increase in tax rebates that everybody's going to get when they file their taxes and they change their elections, all of that is going to mean more money for people to then spend. And that's going to boost GDP. So when is that going to happen? 1Q, 2Q, 26. All right. Not that far in the future. So that's my little economics piece for the day, friends. I love your videos, especially how you break down the accounting nuances. Amen. Somebody notices. I'm not sure if you've ever covered pins yet. What are your thoughts on the recent sell-off? I have not covered pins. Let's go take a look while we're at it. So by the way, thank you for recognizing that I go out of my way to explain the numbers and the accounting. It like, I can't watch YouTube videos for people that follow stocks because they don't, Pinterest, because they don't cover the fundamentals and like the logic and the accounting piece of it. Accounting is the language of finance. Personally, I'm not a fan of accounting, but it's like, I'm not a fan of, English grammar, but I need to understand it in order to be able to have you understand me and speak and articulate stuff. So let's see Pinterest right here. Again, I haven't dug into it, but we see right here, the low 28, the high 48, 25.52. All right. So here's this stupid Windows in my way. Hang on. All right, so this is one of the things that we have to be cognizant of here, friends. So we're looking at Pinterest. So the last 4 quarters, they've had negative surprises. That's never good. So I would say first, that is a big reason why the stock is just eating it. Let's see what else here. What's the difference? GAAP EPS. Okay, so this is EPS performance and forecast. And then something weird is going on here, which I would have to dig into. There was a surprise of 232. There's obviously some sort of one-time item there that's going on. So I would have to dig into that. There's probably some one-time benefit of some sort. Revenue performance. Okay, so the revenue is surprised slightly. So they're surprising on revenues and they're whiffing on earnings. Let's see. Year to date down 12, half year down 20. Target price 37.48. So it's definitely at way more than a 20% discount. It's at like a 40% discount. Aha, hold on. So we have 2 downgrades, Rosenblatt and Mones Crespi and Hart. Not household names here, friends. And their price target change is 30. So there's obviously something pretty significant and fundamental that has happened here. Why Pinterest international revenue trends deserve your attention? Okay, why? And now I have to share this. So hang on. We're gonna develop this thesis here, friends. And again, this is the first time I've even checked this out. All right, so why does Pinterest international revenue demand our attention? Have you performed internationally during the quarter ended September? No. Widespread global presence, digital pinboard shopping tool, global economy is deeply interlinked, making companies' engagement with international markets a critical factor. Hedge against domestic. Okay, decoding. Thank you. During the quarter, rest of world contributed $70 million in revenue, 6.7% of total revenue when compared to the consensus of $64.98. Positive surprise. Okay. Of the total revenue, $193 million came from Europe, 18.4%. This also represents enterprise. Okay, so these are positives. Total revenue for the fiscal quarter. Okay, so what's the wrap? It's like this is all good news. Relying on global markets for revenues, prospects, and challenges. Scrutinizing its international revenue trend is key. Okay, so this is just basically Zach's selling their research, but this is all positive stuff. But it's only 18% of revenues. Okay, so I can't follow the bouncing ball there, but it looks to be at a discount for sure. I think definitely need to dig a little bit deeper into that. And again, just me doing it on a live stream, I apologize. I'm not going to be able to really like dig deep into it. But again, that's another one, online. You're going to have to look at economics as part of it as well. If you think that we're heading into a recession and all of that stuff and how that's going to impact things. But it looks like their international is a solid piece of the business. Hey, can I apologize? I'm just tuning in now. You're forgiven. I'm sorry if you mentioned this already. Is Celsius slowing core brand growth worrying to you? No, it's not. I did talk about that earlier, so you'll be able to watch that on the replay. But what I will say is the core Celsius quarter over quarter going down is not alarming to me. Year over year, it was up. You have to remember now, Celsius is not just Celsius anymore. It's Celsius, Alani Nu, and now Rockstar. Rockstar's only been there for a month. It generated like 12 million of revenue. And you got Alani Nu entering the Pepsi distribution network. So I'm not personally worried at all about it. I bought more. It's definitely at a discount. It doesn't concern me. I'm not worried about it at all whatsoever. What I would say is Alani Nu entering the Pepsi distribution network is going to be an absolute game changer. Absolute game changer. So that I think you have to kind of consider that piece of the puzzle. And they paid these one-time distributor termination fees. And again, you could go check this in the replay. I covered this earlier. So that's why everything looks wonky in terms of the multiples and stuff like that. But I'm not concerned at all. All right, hold on. I'm trying to work the scroll, everybody. This scroll bar is like the width of a human hair. It reminds me, I went for acupuncture this morning, and it's like the acupuncture needle, and I'm trying to grab it with the tip of the cursor. It's super annoying, and then like I go way further um, than I need to. All right, so bear with me a moment as I go up and down a gazillion times. Um, all right. Way to go, Kyle. Adding Celsius PayPal to my list feels like the market is setting up value traps. The market's correcting itself. Yeah, I mean, look, Jeff, you could have a different view, but I mean, the guy's smarter than you and me. Maybe he's not smarter than you, but he's smarter than me. And he knows what he's doing. And I'm putting my full faith and confidence in him. So again, you could have differing views, but again, it's economics. So listen to what he's saying from an economics perspective. Take all the political BS out of there. I'm a software engineer by profession. Oh, cool. But I have a strong interest in accounting. Are there any courses available for beginners like me? Even better, do you have plans to offer a course? So I do teach accounting in my financial modeling course. So you could definitely learn everything that you need to know about accounting. Now, we have to be clear. There's financial accounting and tax accounting. We're not talking about tax accounting. We're talking about financial accounting. So financial accounting, I could teach you everything that you need to know and then some. So what I would say, dude, is send me a message. Like LinkedIn appears to be like the best way. Just reach out. Same thing, Ken Freeman, CFA, and I'll help you out with accounting and get you all squared away there. But as a software engineer, accounting is like a joke. You'll pick up accounting like that, like seriously. Nokia just got $1 billion from Nvidia. Yep, I saw that. Received a contract from the military. Yeah, I ended up buying Nokia during all the meme madness, which was a little dumb in hindsight. But all these infrastructure plays. One of the things I want to encourage everybody to do is don't get swept away with all of the AI stuff. Like, oh, I missed Nvidia. No. Think of everything related to AI that's going to be needed, right? So all of the infrastructure, i.e. the data centers. So that's an Equinix. We talked about Sterling Infrastructure previously, STRL. They build the data centers, so that would be something to check out. But also don't forget, that needs a lot of power. This is why all of like the nuclear stocks have gone up, rare earth stocks have gone up. So try to think of like one iteration or one standard deviation away from AI, specifically like what is AI going to need in order to proliferate. And again, like agree, disagree, all this stuff. It's here. It's not going anywhere. It's coming. So we could get into like, you know, the whole logic and philosophy of AI. Is it too much too soon? Yes, I totally agree with all that. But net net, like who's going to benefit? I think that there's a lot of big winners from AI that people are just not considering, more specifically on the infrastructure side. And that's the part that I think people need to like dig a little bit deeper on. That's where we're going to see winners that nobody is going to recognize. You're going to see stocks that are going to like double, triple, quadruple, and it's going to get onto people's radar after it's already popped. And then everybody's gonna be like, Ken, can you look at the stock? And it's like, it's too late. It already popped. And like, it's one of these things that there's plenty of opportunities out there, but that's where you really have to like have a fundamental understanding and like really dig in. So I don't know if our friend Cooper is still here, but he has an engineering background and really understands a lot of the pieces that go into it. So Verona, he was a big fan, or Vernova, I always pronounce it wrong. That was one that he was a fan of, and that's one that's benefited like tremendously. What do you think of the Nvidia saga being a $5 trillion stock dumped by Peter buried SoftBank? It's overvalued. I mean, I sold at 156. I don't have any regrets. You know, momentum investors would say, you know, don't sell until, you know, it comes back down, but I'm not a technical analysis kind of guy. Technical analysis is very good for entries and exits. It's not good to decide if you should hold something like as an investment. So that's what I would say. So yeah, it's overvalued. Like Nvidia is trading. Same thing with Palantir. That's another one. It's trading at like what it should be like a year and a half from now, not what it should be today. So that's the challenge. And crazily enough, I covered Nvidia in April and it was at 97 and I said buy and I had a value of like 134. But then after that, it blew through 134. Once it hit 156, that was above my bull case. I was like, I'm out. And then it just kept going up. It went to like 206. So it's like, oh, you're dumb. It's like, no, it's just the momentum can take it to like crazy heights. Um, that's the key. Are you hiring any tax professionals looking to find a remote job and you seem like a cool boss to work for? I am a cool boss to work for. I'm not a micromanager. I absolutely hated that when I was on Wall Street, and I hate that in my day-to-day life. I just give people like, hey, this is this is what our goal is. Let's get it done. I do have a tax professional, but if you want to try to woo me, go right ahead, man. Be my guest. But yeah, you know, taxation is pretty cool. Like when you know how to utilize the rules, like Section 179, and you know you can accelerate the depreciation. That's a huge benefit, by the way. You know, this year especially, and that's the other thing. Scott Bessent. Let's take a little segue back to our old pal Scotty there. CapEx. CapEx precedes growth. CapEx always results in growth. So a lot of companies are taking advantage of CapEx in the fourth quarter because they can fully depreciate the asset. That is resulting in like bananas level CapEx. And oh, by the way, Meta, like people crapped all over Meta, and that's why the stock is down because they did too much CapEx. Guess what? If you could fully depreciate that, like it's only going to benefit you. So there is a method to the madness. Kyle, I'm seriously adding, considering, I'm dyslexic right now. I seriously consider adding Celsius. Personally, not drinking any energy drinks. I love Celsius. But this weekend, seeing Alani Nu displayed in key positions at Walmart. Okay. So I'll give you a crazier one. Okay. I ended up going to West Virginia to watch West Virginia football game. I split season tickets with my buddy. It's a whole big story. He's a West Virginia alum. Rich Rodriguez came back, blah, 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 blah. They're on their way, but not this year. And I saw Alani Nu in West Virginia. For those of you who haven't been to West Virginia, okay, it's a little desolate, let's say. I saw Alani Nu in West Virginia. That to me was like, my brain exploded. I was like, whoa. When I saw that like totally changed everything for me. I was like, that's bananas. So yeah, you're seeing it more in a lot of places that you didn't see it before. That's a positive sign. I know, by the way, it's entering the Pepsi distribution network. Wait for it. December 1st. So we're still 2 weeks away from Alani Nu being in the Pepsi distribution network. So if you're already seeing it on Walmart shelves, like wait until it gets into the Pepsi distribution network. Dude, you're going to see it everywhere. Gas stations, the whole 9 yards. I was in Arizona of all places. And I was at like some place in the middle of nowhere. By the way, there's a place in Arizona called Y, Arizona. Okay. So we pulled off on the side of the road, went to go, grab something to eat and drink, like real quick, like long ride, 2-hour drive, and popped in. I'm like, oh my gosh, they don't have Celsius here. So I was like, that's weird. I turned around. There was a whole Celsius refrigerator. So that's what's coming for Alani Nu when it's fully a part of the Pepsi distribution network. I've thought about investing in companies that will be needed by the AI companies. Yes, good. But I only invest in companies I'm familiar with and that I trust. Okay, that's fair. There's nothing wrong with that. That was like people on the channel and even on the live stream were like, check out Nebius. And I was like, okay. And I checked it out and like a deal with, NVIDIA, but it's like, it's all on the come, like the future. So it's like, if you look at the historical numbers, you're not going to get any, like you can't even do a DCF on it. So it's just like a basic guessing game. So I agree with you. It's harder. I would say, our software engineer friend, and then also Cooper in the chat, like people who have fundamental understanding of like the core necessities for AI to proliferate, data centers specifically to proliferate. That's the area that you want to really focus on. But I hear you. If that's a very Warren Buffett way of approaching things. Only invest in what you trust. I'm with you 100%. What about Oracle? Are they taking on too much debt? Yes. But isn't it normal to take debt to build infrastructure? And they have long experience with enterprise customers. Look, Oracle popped like crazy with like all of the, OpenAI news and all this stuff. And when I saw that happen, I was like, wait a sec here. You have a company that's worth tens of billions, over $100 billion, and it goes up 35% in one day. It's like, do the math, because 35% of value. Okay. So it's like, what's going to happen in the future to justify that value? You can just do like back of the envelope math and you're like, yeah, that's not going to work. So I think that's one that's, definitely coming back to earth. That's one that like when a stock goes up that much, that fast, and unless it's like an M&A deal, like it's a buyout, there's no logic to that. That one's bonkers. Oh, it looks like Jeff, you were the one that was telling me about Nebius. Yeah, so that's one, like you just can't wrap your head around it, because if you look at the historical numbers, it didn't have any of this stuff baked into it. So you're kind of like really just going on the future. It's like when I did Rocket Lab on the channel and I had like the most ridiculous comments. It's like, kill yourself, you're an idiot. And I'm just like, I can't understand the numbers. Like somebody explain to me, like talk to me like a 4-year-old and explain to me the total addressable market for rockets going into space. Are you launching rockets into space? No. Am I? No. Are companies? No. Governments? Yeah. Like, I just don't understand. Like, who has the satellites? Like, you just start like running down the whole like list, and you're just like, what? There's a limited amount of crap that can go above the earth. Like, what is going on here? Like, who are the satellite companies? They already have the satellites up there. I just couldn't freaking understand it. And instead of someone explaining it to me, they just like kept coming back. Like, wait until the Falcon jet or whatever the hell it is comes out in 2027, you moron. And I'm like, what is that going to mean? What is that going to do? What is it going to generate? I don't understand this. It's like talking to my ex-girlfriend. I'm like, I don't understand. Like, explain to me. Like, I'm logical. Like, I don't think in terms of feelings. This is bananas. So that's the whole thing. So like ASTS, Rocket Lab, don't understand it. Can't understand it. Like someone has to explain it to me. It's like, oh, they launch satellites. Okay, well, like what? Who is launching these satellites? I can't wrap my brain around it. It makes no freaking sense to me. And it's like the stock just keeps going up and it's like, you're an idiot. And it's like, no, I don't understand the math. Like someone has to explain it to me. It's bananas. Hi. Valuation is high, but I'm thinking it may be justified considering the growth. I'm sorry. I'm not. I went on my like diatribe and I forgot what you're referring to, Nick. I apologize, dude. Sam, Meta is trading below 600 after hours. Are you thinking of buying more? Yeah, actually, so obviously it's high priced. So like, you know, I did buy more, but I bought like 2 shares. So I did buy more last week. So yes, if it gets below 600, remember, I already have a position that I built below 500. So I'm just kind of like topping off my existing position. But for those of you who are like, oh man, I missed out. I missed out on Meta. No, you didn't. This is a tremendous buying opportunity, honestly. I really, really, really think that it is. Any thoughts on iron? Yeah, that's another one. Somebody, it wasn't you, Jeff. There was somebody else that like dumped like 5 tickers into a comment, and I'm like, you know, like typing them all up. Let's go pull up our pal Iron, see how Iron's doing here. Doo doo doo. Finviz is just like spinning around ever since I put Pinterest in there. And just full disclosure, I haven't like dug into this, but I'm going to share because sharing is caring. Wow. The estimates on this are bananas, dude. Like, huh? Oh, okay. So the low is 28. Okay. Average is 86. The high is 136. Bananas. Okay, let's dig deeper, friends. Not a ton of coverage. 8 strong buy, 1 buy, 2 hold, 0 sell, 2 strong sell. All right, so let's see how they've done. 2 super positive surprises last couple of quarters. Okay, very nice. Jeez, this thing is like a freaking rocket ship. Holy moly. Revenue was a negative surprise. Target 86. Wah, wah. So we got downgrade. Your friends at HC Wainwright. It sounds like one of those. I'm thinking of JG Wentworth. If you have a cash settlement and you need cash now, call JG Wentworth 877 cash now. That's what I think of when I read HC Wainwright. So 45. Roar. Yeah, again, I'm just like, this is kind of stupid. I feel like the other idiots on YouTube where they just like read crap off a screen. This isn't really doing us much good because I'm not like doing a deep dive here. Oh, there you go. Oh, it's Motley Fool. This data center stock could go parabolic following NVIDIA earnings. AI hedge fund situational awareness reports stake in iron, Core Scientific. Smartest growth stock to buy. Well, Motley Fool is selling it. Okay. Huh. Uh-oh. Jim Cramer says iron is a press release stock. I'm going to have to dig into iron a little bit here. Let's see. Hold on, friends. I had it up. Full disclosure, as you probably, I've already alluded to numerous times, I have way too many things open on my computer. So if this crashes, it's all my fault. But let's see. Hold on. Let me go share this. Dun, dun, dun. Hang on. We're still on the iron, friends. Okay, here we go. Bam. So the multiples have gone bonkers here. All right, 19.42 on the revs when historically it was in the single digits. Okay. Let's see quick comps. Who would be the comps to iron? Riot platforms. Dude, I I want to like look at that company just because of the name. That's pretty awesome. Let's see the multiples though. 19.4 on the revs. Bitfarms, Bitdeer. I need to like look at the tear sheet. What's going on with this company? Vertically integrated data center. Australia and Canada. Haha. Company owns and operates computing hardware as well as electrical infrastructure and data centers. It also mines Bitcoin. Aha. A scarce digital asset. All right, so they're a bit miner. They're kind of all over the place, dude. Australia. Okay, so now I'm going to give my 2 cents. I think that's where I'm kind of like a little womp womp. Canada and Australia don't really strike me as like the big areas for like data center proliferation. Again, I'm just spitballing here, friends. So that would be my only like counterpoint to that. I don't know if they have plans of operating in the US and then something about Nvidia earnings, but that was all a Motley Fool crap. So I don't know. I don't know what the story is with that. I'll have to dig into that. I found an international tech stock for us. SAP. Okay, interesting. We'll love your quick take. Let's go take a look. It's been a real long time since I've looked at SAP. But that's also an interesting one. Let's go to FinViz first. SAP. SAP. SAP ADR. Yep, that would be the one. All right, let's go see as I make my confused faces. Okay, SAP ADR. Here we go. So 2, 4. Wow. Okay. So even the low, it's at a 23% discount to the low. Holy moly. The low target. It's a 43% discount to the average, 57% to the high. Wow. Huh. This one's an interesting one. Consensus buy. Maybe strong buy. Yeah. 8 strong buy, 2 buy. Okay. Wow. No sell ratings. That's pretty awesome. That's like super rare, by the way. Wow. Last 6 quarters, positive surprise on EPS. Look at you. You might have found a little diamond in the rough for us, friends. I mean, they kind of met estimates in Q3. This is one that I'll have to add to the list. Yeah, this is like very undervalued. Let's see the latest. Yeah, okay. So BMO dropped its target from 330 to 320. It's still redonkulously undervalued. It's like, oh, it's at a 50% discount. We're lowering. Yeah, but they still have an outperform rating. Erst Group, whoever the hell that is. Top stock reports for SAP, Prologis, and Bank of New York Mellon. Let's go over to our friend CapIQ, see what they say. They always have some good stuff. SAP. We might have struck gold here, friends. Good look, dude. All right, hold on. Share the screen. Yeah, this is one of those ones that, you just kind of forget about. Yeah, Enterprise Business Solutions. I mean, this is like big time, well-known company. Let's see. I'm curious of the quick comps here. Let's look at the multiples. 21.7 times EBITDA, kind of in line on the revs. I mean, here's a good example. Like, look at them relative to Oracle. Oracle's at 12.3. They're at 6.6. Now, I think Oracle's overvalued, but geez, 6.6. Like, still at a nice discount there. This is very interesting. Good look. You get a gold star. This is also super helpful. So gross margin, 74%. That's fantastic. EBITDA margin, about 30%. Again, this is only giving us a little piece of the proverbial puzzle. I'd want to see how it is over time, but it's definitely worth a look, to say the least. Let's see the CIQ estimates. Wait for it. Yeah, it's outperform across the board. Median, about 300. So yeah, it's at more than a 20% discount. Outperform rating across the board. All right, so you actually see. Here's the thing, okay? So now, me personally, where my brain is right now, I'm like, OMG, I want to go look deeper into that. But because we're where we're at, friends. I think we're at 12,100 subs. Thanks to all of you, by the way. Um, the algorithm, like we're still subject to having to do videos based on the algorithm. Oh, we're not at 12,100. We're at 12,099. Call up one of your friends. Tell them to subscribe to the channel, guys. But that's the problem. So I know it sounds like redonkulous, but we're still kind of subject to trend hacking, unfortunately, and we have to cover stocks that people are searching for. I would have to check out SAP. So here's what I'm going to do. I'm going to add it to the infamous list, the ever growing list. So we got IREN, SAP. I will say IREN's probably being searched for a lot. But SAP, I want to check that one out. That one's an interesting one. That's one like Qualcomm. You know, people are like, oh, did you check that out? And it's like, no. And then you start looking at it, you're like, wow, this is actually like really freaking interesting. And the ANET is also overvalued, no debt, but the growth is there. Yeah. Truer words have never been spoken. Don't worry about people in the comment sections. They're not the sharpest knives in the drawer. Amen to that. Dude, like, you should see some of the comments. I'm like, bro, it's a stock valuation video. There's no like political content here. There's nothing that's like controversial. And it's like, here's the thing that's bananas to me. If you think I'm an idiot, wouldn't you be like, wow, look at this idiot. Like, he's missing out on stock XYZ. Like, wouldn't you think that? And just be like, ha ha ha, he's going to miss out on tons of money and becoming like a trillionaire. Like, that's the way I would think about it. Not like, you know, questioning like your, you know, existence on Earth and stuff. I'm just like, what the heck? Oh, okay, Nicholas. Reddit. Yeah, Reddit has also come on the radar. Bear with me one moment. I'm going to add that one to the list. I was looking at that. My big thing with Reddit was I was waiting for it to get positive EBITDA. That is one that's also on the radar, and it does have some search juice to it. I'm in IT too. I'll add CRM, Adobe. Yep. Okay. All right. So hold on. SAP now. Okay, so now we've got IT folks who are telling us to check out SAP as well. See, this is another thing, guys, and this is important. I think it's very important for. I'm going to sound like Peter Lynch, Warren Buffett here for a second. You, like literally, you know more about a lot of things than I do. All right, and what I mean by that is subject matter expertise. Okay, and I'm not being a jerk here. Maybe not valuation. Okay, full disclosure. But like an IT person that tells me about an IT company, I'm listening. Okay, I'm listening. And that is really the key. So like the whole idea of like staying in your lane, like anybody can figure out a consumer products company. But if there are like areas where you work, you're like, I'm a software engineer and this is the company we always like work with. It's like, duh. Like what's the one I always freaking forget. They do the CAD software in engineering. This is going to drive me insane. Somebody's going to come up with it and I'm going to be like, meh. And it's always a company that's like never undervalued. Hang on, this is driving me insane. Company that makes AutoCAD software. Someone's gonna come up with it before I do. Autodesk, freaking Autodesk. So yeah, Autodesk is one where it's like, you know, I do consulting for engineering firms, and like they're using Autodesk. You know, it's like, so it's a monopoly basically. So that's something where it's like, oh, duh, that's what we use. But the average person doesn't really like know about stuff like that. So it'd be the same thing with like S&P, you know, where you have a specific subject matter expertise. I think you guys like really need to like mention that. You know, that's the type of stuff where it's like, okay, let's check it out. Joby's recent earnings report, dude, Joby is like, it's either going to 100 bagger or it's zero. I have confidence though that it has a high likelihood of 100 bagger. I mean, the fact that there's anything going on there is positive. This is like the other one that I get a kick out of. What the hell's the one that has no revenues that everybody's like, oh, did you check this company out? It's like, no, they don't have revenues. Joby, I mean, dude, honestly, like, it's a benefit for any of you that like want a potential 100 bagger. I bought Joby at $4. I threw 5 grand into it, and it was like going to the casino and throwing it all on black. But I don't want you to think I'm a gambler. I looked at who was associated with the company, and I was like, oh, I mean, it's all like really, really, really smart guys. They're like Amazon, former Amazon, former Uber. Like these are just like it's basically like a venture capital firm. So you have to believe that EV toll is going to be a thing, and I think it is. Um, Probably much faster than the humanoid robots are, to be quite honest with you. So I'm still very positive on Joby. It got way ahead of itself. Like when people are like, "Have you seen Joby?" I'm like, "No," and then I'm like, I look at my portfolio. I'm like, "Oh my gosh," it's like almost $20. It might have even gone above 20. I don't even know. And then it's just like coming back down to earth, pun intended. Let's see where it's at now. Is that like 13 something? 13.89. But 52-week high, $20.95. Dude, when I saw it hit 20.95, I'm like, what? But let's see. One day ago, Joby Aviation completes crewed eVTOL flight in rehearsal for Dubai Air Show. That's interesting. They also wrapped up their first military aircraft test flight with L3 Harris. Oh, Jim Cramer, Joby Aviation's losing too much money. It's like, no, duh. Like, it's a startup. Joby Aviation's like your opportunity to invest in a venture capital firm. The other one I was thinking of was Archer Aviation. That's the one where they have no revenue. At least Joby has revenue. So yeah, dude. I mean, it's too early to tell with Joby. It's kind of like I remember one of my buddies was like, "Oh, did you check out Lilium? They're already bankrupt." So it's really like who's going to actually make it in this whole eVTOL madness. Um, let's see. You know all about the numbers and things behind stocks. So you're able to make estimated guesses. Meanwhile, I'm basically gambling. No, I don't think you're gambling. I'm hoping my money comes back to me in a few years. So hold on. They're going to be building AI data centers in the Netherlands. Huh. I'm like, I like hopped into like a different thread. AI data. Oh, maybe that's SAP. Um, so first, I want to address you specifically. You're like worried, like, oh, your money's gone. Not the case. I got to find it. It came up a few days ago. It was Warren Buffett and Charlie Munger. There was an article. Uh, mm, uh, and I'll pull it up because it'll make you feel better. No. So here it is. 6 days ago, I saw this. Legendary investors. You're going to feel much, well, I don't know if you're going to feel better, but if you want to be a legendary investor, you have to be willing to weather a 50% drop. So prepare your portfolio for a 50% drop with Buffett and Munger strategy. What's the strategy? Talk to some random old chick like Warren Buffett. Yeah, it's down 50%. What do you think about that, huh? Okay. So enduring an occasional 50% drop is crucial for any investor seeking substantial long-term gains. Market leaders such as Berkshire Hathaway, Amazon, and Apple have all had major drawdowns but recovered, staying focused on fundamentals. So here's what I would say is, yeah, and this is really what I was focusing on here. If you can't stomach a 50% decline in your portfolio, you'll never achieve exceptional results. Now, what does that mean? What that means is when it goes down, don't just like dump everything, okay? And if you have a diversified portfolio, this is the argument, by the way, to have like an Albertsons and a Constellation Brands and a Lululemon. If everything is just tech, when tech starts pulling back, which it has, I can tell you from my own portfolio, you don't have anything to counter that. This is like literally the whole argument for, diversification. You have different exposures in different areas and different sectors. So that kind of mitigates it. Now, you're obviously very heavily skewed towards the, tech side, as am I. Okay, full disclosure. But I wouldn't be worried, dude. I mean, it's like you're down 30%. I mean, I don't know where you were in 2008, 9, and 10, people are like basically giving up on investing at that point. I'll never forget. This is actually an interesting story. So I go in, I'm working at the hedge fund, and I walk in, I'm like, I'm gonna buy the market. And people are like, are you crazy? Are you certifiably insane? And I was like, no. And they're like, what if it goes down more? I was like, I'll just buy more. So at the time, the Dow, which is like at like 50,000 now, the Dow was at like 7. So I was like, I'm going to buy this. This is stupid. This is stupid. It's just like way down. This is stupid. And everybody's like, you're crazy. 7x. Who's crazy now? So you have to be willing to, weather the storm, so to speak. Again, it is the most difficult thing, but this is where fundamental analysis comes in. We don't focus on technical analysis here, nor would I ever advise that for anybody. It's okay for entry points and exit points, but you're going to be fine. If you have solid companies, I think you're going to be A-okay. So I would not worry, my friend. I would not worry. Here's what I would say. Don't sell everything, because 5 years from now, you'll be kicking yourself. I can say that with 100% certainty. Yeah, dude, you've got so much time. What I would say also, go look backwards. This is also helpful for those of you who get like worried. Look backwards, look at the financial crisis, but look at like, pick a stock like Apple. In the early 2000s, Apple was below $10, literally. And again, if you said like, I'm going to invest in Apple, people are like, are you crazy? So I think you have to really put things into perspective. And dude, you're going to be fine. Trust me. Can you please explain how to become CFP or CFA? Well, the first question would be, which makes more sense for you individually? So CFP, Certified Financial Planner, CFA, Chartered Financial Analyst. So CFA is like for investing. That is what it's for, investing. CFP is financial planning. So that's like insurance, setting up trusts and wills. Me personally, not super interested in that. I mean, there's some cool stuff with that. I'm more interested in the investing side. So I would say, unless you are planning on becoming a financial planner, which is a whole other ball of wax, if you want to invest, you want to work for like a fund, that's where CFA makes the most sense. So the CFA is 3 exams, level 1, level 2, level 3. They are 6 hours each. So there's a 3-hour morning, 3-hour afternoon. It is brutal. It's like over 3,000 pages of material. It's a massive amount of studying. They say minimum of 300 hours to pass. The benefit that you have, everybody has now versus me, is when I went through the CFA program, the level 1 was offered twice a year, and level 2 and 3 were only offered once a year. So when you failed level 2 or 3, you had to wait an entire freaking year. Now, when COVID happened, one positive from COVID was they started offering it more frequently. So I think they offer like level 1 like 4 or more times a year, and level 2 and 3 like 3 or more times a year. So you could go through it much faster, but you need 4 years of full-time work experience to actually get the CFA designation, and half of that has to be in valuation. It's a very broad definition of what counts as valuation, by the way. And I'm not biased in saying this because it's like, oh, you're a CFA charter holder, you prefer CFA. If you want to be a financial planner, then yes, CFP makes a heck of a lot more sense. If you want to do anything on the investing side, CFA is definitely the way to go. So yeah, that's my 2 cents. I think the CFP is like 4 exams. But again, it's like trusts and wills and insurance. And I personally don't have any interest in all that crap, but that's really the main difference between the two. Do you think Fannie and Freddie will be made public? Yes. I know Bill Ackman is sharing his proposal tomorrow, but wanted your take on it. Yeah, so these were public for 40 years. And then the financial crisis happened and they were put into conservatorship, which doesn't mean they didn't exist anymore. It's just they were like taken, I think the government took like an 80% stake, like blew out, everybody else and stuff like that. And it's like, nothing to see here. It was kind of like the TARP program where they just bought all these toxic assets. But in this case, they left some of it like kind of like hanging out there. So yes, I think it's going to go back to being publicly traded. I don't think there's not enough capital in the world to backstop it. It's always going to have to be backstopped by the federal government. But I think, it was funny. I followed Bill Ackman's thesis back in like 2012, and invested then. And I guess I was a little early to the party. So yeah, I think it's definitely happening. But it's already popped a lot. That's the thing. Kyle finally came up with it. There's an obvious delay on this. Yeah, Autodesk. That one's a good one. That one's like a freaking rock star one. Like if you can ever get that cheap, you just like buy it hand over fist. The problem is it never is. That's that's the thing that's unfortunate. But yeah, that's what I was thinking of. Thank you for that, Kyle. Sorry, this scroll bar is gonna I'm gonna become like a blooper reel with this freaking thing, dude. This is so. I'm telling you, this thing is like it's like I'm grabbing it with like a pair of tweezers. This is so ridiculous. Someone call Riverside and tell them. Hold on. I think I answered this. I'm just going down the line, friends. What's your perspective about reading into capital allocation for super investors in their 13Fs? Huge fan. Knowing we won't know the detailed price and exact time of purchase and disposal. Or will we? So, I did. Hang on. I'm going to pull it up. I covered it in the Constellation Brands video when we last covered Constellation Brands. So I want to show it. So this was all done by analyzing 13Fs, friends. So there is value to it, is the punchline. But I want to show it to you so you can see what I'm talking about here. Window? Yes, window. Okay. All right, so take a look here, friends. Here, let me zoom in. It's like showing up really small on the screen. Lo siento. All right. Alto CA. Bam. Okay, so I got all of this information from 13Fs to try to find Berkshire Hathaway's stake in Constellation Brands. I haven't updated it for 3Q. They still have it. 7.6% of the company is what they own. So this was actually what brought Constellation Brands on my radar in the first place. So they doubled their stake in 1Q and then increased it even more in 2Q. And this is why I always get a kick out when people are like, I invested in Constellation Brands. I lost, $30. It's like, dude, they've lost a little bit more. So when I see somebody or an entity investing billions of dollars, 2.2 to be exact, and it's gone down, I pay attention. So yes, I do pay attention to 13Fs. So the stake that they built, this is up through the end of 2Q, 2.6 billion, 13.4 million shares at an average price of 197.09. Now, Constellation Brands is at 130. So you're able to get it. Wait for it. At a 34% discount to what Warren Buffett has it at. And if Warren Buffett owns it at 197, you could be damn sure he thinks it's probably worth 250 to 300. Okay. So yes, there's a ton of validity of looking at the 13Fs. But I would say you still have to do your own analysis after that. But yeah, I'm a huge fan of checking out 13Fs. I think it's a great opportunity to learn about other investors. I would say, though, there are instances where, entities will invest in stuff and it's just like, I don't understand the logic, what they're doing, why they're doing it. But I do think it's a good practice. It's definitely a good exercise for sure. I'm a huge fan of it. I do it myself, and it's something I would definitely advise checking out on your own if you don't already do it. Chat's going bonkers. Oh yeah, dude. Like, yeah, don't sell your stock, please. Like, I'm telling you right now. So, I'll give you a little lesson, friends. You can't time the market. Nobody can. Not me, not you, nobody. Here's the crazy thing. Over the last 20 years, if you miss the 8 best days of the stock market, okay, you pulled. You're like, I'm out. If you miss the 8 best days, your performance would be 80% lower. 80%. Think about that. Now, over 20 years, okay? I always like analogies and stuff like that. I think we kind of wrap our brains around it a little more because like 8 days, 20 years, huh? Imagine you made $100,000 at work, okay? And you missed 12 minutes of work. So you came in late, you had a dentist appointment or something like that, and your boss said, hey, little heads up. You're like, what? I got to cut your pay. Why? Well, you missed 12 minutes. Yeah, so what's the big deal? Yeah, I got to cut your pay. Okay, well, what are you cutting it? 10 bucks? $80,000. You'd be like, is this a joke? This is a joke, right? That's literally the equivalent. So if you miss the 8 best days of the market over the last 20 years, your performance is 80% lower. Now, when do the best days occur? Wait for it, wait for it, wait for it. After the worst days. So the punchline is you got to be in it to win it. I would say all of your capital, and this is going to be another thing, and people are going to be like, what? If you want to know my honest opinion, dollar cost average into the S&P 500 with your retirement, anything over and above that, go into individual stocks. That's what I do myself. So IRA, 401k, S&P 500 dollar cost average. After that, that's when you invest in individual stocks. Now, the funny thing is, everybody on here is like, ha, 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 ha. Like, nobody does it. It's so fundamental. It's so simple. Like, 98% of professional money managers underperform over a 10-year time frame. And if you actually go out further, it's even worse. So it's like, why overcomplicate this? Now, if I tried to do a YouTube channel that just said that, like, it'd be like, that's it. It's like, that's it. So really what we're focusing on is what you should be investing after you've already maxed out your retirement into, the market, so to speak. Again, you might be in Europe, so it would be different in your case, but I would still, if I was outside of the US, I would still invest in the S&P 500. But that's long and short with that, my friend. Whoa, wait a sec. We got somebody with the inside track. Ken Freeman's the best. This is a JP Morgan analyst. So I do train, I say it on the channel, I train JP Morgan's analysts. So we've got fact right there, and I didn't pay them. So thanks for that, bro. I might be seeing you in February, possibly, if you started this summer. So I might be seeing you in February because we do like a refresh. So that'd be cool if I could see you then. Otherwise, just hit me up, DM me on LinkedIn, bro. But I appreciate that. Love the shout outs. I'm trying to follow the chat. Boom. I think there's so many opportunities to buy into. You just got to focus on the future and beat the market. Yeah, easier said than done. This is true. I love this. You guys are like going back and forth in the chat. I'm like following, I'm like, wait a sec. You guys are talking with one another. This is great. I love this. David, long time no see. Hope you're doing well. I got caught up in the government shutdown travel craziness, but I'm back. So we're going to be very consistent moving forward. Last week I was stuck in an airport with canceled flights and all sorts of madness. But we're back. We're back now. Every Monday, 7 p.m. Eastern Standard Time. Yeah. So Jeff, the 8 worst days are here. Yeah. You got to. It's one of those things. Investing is not for the faint of heart. Everybody does well when the market's going up and to the right. It's like, oh, this is easy, and they invest in whatever. But when the market starts pulling back, that's when like, okay, who's really in it to win it? Michael Burry, is that you? Yeah, Michael Burry, like, he bounced because he was like, none of this makes sense. He was just like, I'm out. He's like, I just shorted a bunch of stuff and it still goes up. I'm out of here. I'm just gonna cover and boom, exit. It'll be interesting to see like what happens. Like, what does he end up doing? Maybe he comes back as a humanoid robot. Who knows? I'm gonna take a swig of Fiji. I've been doing a lot of talking, drying out the old throat here. I'll tell you what, I find it very refreshing, like diluted Gatorade. It's not in there, but I was just thinking of it, like just that little bit of hydration. And I know it's horrible for you and the food dyes and all that stuff. Although I was rocking some Element watermelon, by the way. Like, I don't know what it is with me and watermelon Celsius, watermelon Element. And that, like, it's got to be cold though. Like, I love it, like, nice and ice cold. And I'm just thinking about it real time. I've got watermelon sparkling water in the fridge downstairs. And dude, I freaking love that. It's like so freaking refreshing. I can't get enough of it. Um, I recommend looking into Corsair. It's insanely undervalued. Who is it that mentioned Corsair earlier? Was it Jeff? No, it's somebody. Oh yeah, no, maybe you mentioned Corsair earlier because you're invested in it. Here we go. It was a pump and dump during COVID. Dun, dun, dun. All right, let's go take a look, guys. Da, 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 da. Corsair. I'm thinking of the car. That's the Corvair. Corsair. Oh, gaming. Mm. Always got to be careful with these gaming stocks. Those are bonkers. Like, what was the other one? I've got one that I still have in my like companies that I follow. FFL. What was it? It's another gaming. Hold on, I got it in like my list of stocks that I follow. Hang on. It's another one that's just like, why is this on your watch list? Full House Resorts, FLL. Yeah, that was another one. Yep, that was another one that popped during COVID. But I mean, it's an absolute dog. But again, it's another one of these like gambling, gaming, what have you. All right, so let's see where we at with Corsair. 577. All right, average is 9. I'm guessing like there's like 5 analysts that follow it. Yeah, pretty close. Strong by 3, buy 1, hold 4. No sells. Consensus buy. Okay. Negative surprises. We don't like that. EPS is negative and negative surprises. Not feeling warm and fuzzy about this one. Jeez, the performance in the toilet. Oy. All right. Initiated buy at 12. Okay. So here's the thing. All right. Corsair Gaming. Is Corsair Gaming going to become the next, like, Wynn Resorts, something like that? Picture Boyd Gaming, like what? I don't know. I'm not big into like gaming stocks. That's what you really have to like think about. So I would rather invest in Meta, than Corsair Gaming. I want to invest in stuff that's just going to compound for a really long time. So that would be kind of my counterpoint. Again, no judgment here, no judgment. But yeah, just those are like I've done stuff like that before, but I would say if you're just like taking a flyer, if you're like, yeah, when it gets to 9, I'm dumping it, then go right ahead. But I just can't keep my eye on stuff every day. Like I'm not looking at I'm dead serious, honest to God. I don't look at my portfolio every day. So I want to know that regardless of what happens, like I'm going to be okay. I think Burry still has positions, needs to get out of reporting his position because people just hate the Bears. Yeah, that's true. That is true. Yeah, dude. I'm into the element. Yep. I haven't tried the Celsius hydration. I should do that. Oh no, Jeff had Corsair during COVID, bumped and dumped. What? Corsair's a bargain. We're going back and forth. Yeah, I'm probably more in your camp, Jeff. Again, like you guys do whatever you want. It wouldn't be a long-term play, is what I would say. Celsius hydration way too sweet. That doesn't surprise me. Yeah, I like Element. It's just like just barely sweet. I'm a big fan of like try what you buy or buy what you try. So like if I'm going to invest in something, like I was at the airport, I was at the United Club. I'm like, what should I drink? And I saw Modelo. I'm like, Modelo. It's like Constellation Brands. Got to try it. So if I had the option of Celsius hydration, I would, and it was like right in front of me, I would take that. I wouldn't even care that it's sweet. I want to support our companies here. You haven't been generating alpha. You and everybody else, my friend, unless possibly you were shorting companies, then you would be able to. Yeah, computer gaming feels like a niche segment. True. Oh, okay. Yeah, that's a good point by buying Microsoft. Fair point. Yeah, I mean, look, computer gaming, I don't know if I'm like a conspiracy theorist, but it's like how do you know? Like, I know if I go to the casino, which I don't gamble at all. But if you go to the casino and you like roll the roulette wheel or play craps or something like that, you could like see it in front of you. Although you probably shouldn't bet with like, was it Chauncey Billups and all those NBA guys? That thing was bonkers. Um, but yeah, I don't know. I'm just skeptical with that. And also, if we're all saying, hold on a second, if we're all like, oh, we're kind of negative on the economy, we're worried about that. Like, who's gambling when, you're worried about like where your next meal is coming from? So it's like, we can't be negative on Chipotle, as an example, and then positive on a gaming company. It's like we're like we're counter like thesis here. So you want to have like a consistent through line. So if, for example, you are like negative on Chipotle and then positive on a gaming company, it's like, whoa, like who's doing the gaming then? We could get into like DraftKings. I could tell you about like all the degenerate friends that I have in my fantasy football league. I mean, they do the most ridiculous things. They send these screenshots of like an 8-leg parlay, and you're like, what? I mean, it's just like ridiculous, but it's like $5, so you don't expect much on that. Views on consumer confidence, just consumer stocks in general. Feel like everything is falling. Many retailers, and also Chipotle. What do you think will turn the outlook? I'll tell you what will turn the outlook. Holiday spend. So everybody keep an eye on Black Friday. Black Friday. So Black Friday will be coming up in not that long. Ooh, I gotta go Christmas shopping. The 28th. So wow. We're 11 days from Black Friday. That will be a big test. Okay. If people are still going bonkers with Black Friday, then we're in better shape than people might think. But going back to the conversation earlier with tariffs, the $2,000 check, the rebates from taxes, blah, 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 blah. I'd say 1Q, 2Q 26 is really when it'll go the other way. Let's also remember, folks, hold on. This is real time. Real time, your boy. Okay, hold on. The S&P is up 13.2% in the last year. Year to date, it's up 13.7%. That's pretty good. Historical average over the last 70 years, 10.4%. So we have outperformance on a relative basis of 30%, more than 30%. So we're still like good relative to this pullback. And frankly, like pullbacks are good. I'd rather have like 10%, 15% than like 50%. So I think that's really what we're seeing right now. So I wouldn't get too concerned. Gaming. Yeah, Black Friday is the 28th. The 28th. That yes. See? Jeff, you like read my mind, bro. Lululemon is bound to rebound. Amen to that. So, Lulu reports on, I think, December 4th. And it's basically right now, it's like priced for dead. Like, let's face it. What is my average price? I think my average price is like 168, fortunately. But again, we're not technical analysis folks here, but it's pretty much bottomed out. The 52-week low is 159.25. Mark my words, okay? It's November 17, 2025. In 2026, Lulu will be above 300. Okay? I said it here first. Again, this is not financial advice. Talk to a financial advisor, blah, 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 blah. But 2 cents, okay? You're talking about a stock, by the way. This is the crazy part. And I don't know if you guys have experienced this as well. Time is very like weird. Something that seems like it happened like 2 years ago happened like a month ago. And then something that feels like it happened yesterday happened like years ago. It's weird. So Lululemon, friends, this year, at the end of January, was over $400 a share. 400. 52-week high, 423.32 at the end of January, 2025. Now, if we go, and again, we're not technical folks here, right? But if we go back and we look, this is like a consistent trend with this stock. This is bonkers here. Again, we're not technical analysts here, but let's go take a look at this. I'm going to pop open a Lulu. Hopefully we can get a 5-year chart here. Yeah, buddy. This is bananas. All right, let's get the 5-year chart. Come on. It's showing me the 1-day chart. Let's get the 5-year chart. Here, let me show it. Lulu. No, not the 1 day, not the 1 year, the 5-year. Okay, so let's take a look, time frames. So right now we're in November 23. So it was 424 close, 422, and it went to 511, ironically on Christmas. That's weird. Okay, so let's fast forward. 2024. Hold on, wait for it. Okay, close 320, and then in December, 386 pops, comes back down to earth. Okay, hold on. This was back in April. Yeah, okay, so I had a little bit of a pop, and then it just like totally crapped out. So in the beginning of the year, okay, so let's step back and think about this, right? Lululemon has their fiscal year end, I think the end of January. So that means they're going to report their full year numbers, which includes the holiday period in March. So you have to be patient with that. But I personally think that Lulu, probably in the second half, 2Q26, that one might rip. That is what I'm feeling. I want a black swan with the Black Friday deal. Yeah, I think there's going to be some pretty good Black Friday deals for sure. Small cap, honest company. That's not like honesty, I don't think. Let's go take a look, friends. Honest. Pop it up into Finviz. I was looking, what the hell is the, there was a micro cap. It came up, bollocks. I don't remember what the heck it was, but there was like a real small cap company that came up on the radar. I'll have to go back to it. Okay, so this is oh, I'm not sharing my screen. All right, bam. Honest. So it's at 243. The low target is 3. High is 6, but how many people follow it? Okay, well, there's 7 analysts. 3 hold, 4 strong buy. How have they done? Wow. They have EPS over the last, since 2023. Positive surprises. That's good. Gap EPS too. Revs. So negative surprise on the revs in Q3. That's probably a reason for a pullback. Dang. This thing has hit the skids, bro. Target price 4 on 243. That's nice. See, the problem is like very little coverage. Telsey Advisory Group, and they seem like they follow pretty closely. They changed the target from 6 to 3. That's like a massive change. But it rocketed higher. Where the hell's the chart? Hang on. Dividends, earnings, revenue. It'd be nice if I could. Here we go. Stock detail. Hey, there we go. Whoa. This is like a bad roller coaster. It's just going down to Chinatown. This, it popped after earnings. It like gapped down here and then had earnings and then it's come back down to earth. I think that's probably more the market than the company itself. But again, we're not technical analysts here, but this is definitely not what you want to see. Gross margin, okay. Operating margin. I mean, they have really thin margin. 3.6 on operating. Also here, let's look right here, guys. Return on invested capital 3.6, Buffett like 15%. I mean, there's not anything like to really excite you there. So if you want to take a flyer on it, you could, but it's just the numbers aren't shaken out there. Um yeah, let's see. I love that you guys are talking to one another. It makes me proud. I'm like a proud older brother. Uh, we got to get Fiji to sponsor this or Evian. So every time I drink it, brought to you by Fiji. We're going to need more than 12,000 subs to accomplish that, is my guess. Let's see. Who's coming up? That was a weird sound. I'm trying to think. I got to cover a bunch of the Mag 7. So I covered Tesla. Obviously, I got to get back to Meta. Meta is definitely solid. I would think that's kind of a no-brainer. But yeah, anybody that's here right now that's like, oh my gosh, I gotta sell my stocks. The only reason, okay, and this goes back like conversation from like an hour and a half ago, Tesla. All right. Why am I not like sell Tesla? Because the only reason to truly sell a stock is if the fundamentals have deteriorated, meaning they're over levered, the revenue has gone in the tank, margin compression, competitors eating their lunch. Like those are the reasons truly to sell. You don't believe in the company anymore. You don't believe in the thesis anymore. So those are the real reasons that you sell a stock. You don't just sell a stock because like it's, above your target. Realistically, the way it should work, even with Tesla. So on my school community in the deep dive that I did for Tesla, that is the most heavily covered stock on the channel, by the way. We've covered it 6 times. So every time I cover it, the valuation increases. Now the stock goes, but the valuation is consistently increasing. That is the most important thing. So you want to see that the valuation is consistently increasing over time. If that's happening, you're golden. That's really the key. And also you have to understand, like, so Celsius, and I mentioned this in the video, hedge funds like left Celsius. They're like, dude, we got over 100% return on this thing in less than a year. Bye-bye. Because they're not in for the long term. They're like, what more upside do we see from this? So they popped out of it. But I see still more upside, a lot more room to run. Pepsi has 2 board seats. Pepsi owns 11.6% of the company on an as converted basis for their 2 convertible preferreds. It's kind of like, okay, who could or would potentially buy Celsius? Doesn't take a rocket scientist. Pepsi. They already have the distribution. They know everything about the freaking company. So when I look at a company like that, I'm like, this is kind of a no-brainer. Pepsi's not going to let their investment, go down a blaze of glory. They've got, $1.3 billion exposure. But also, don't forget, they make money from Celsius through the distribution. So not only do they have exposure from an investment perspective, they also have an exposure from an actual distribution perspective. So it's like, there's so many like rational reasons for that to continue and make sense there. Any thoughts on Grab? I think you might have mentioned this one previously. Market leaders start generating positive profit. Notice more institutions bought in now. So I've gotten burned personally with companies that I don't have the ability to do business with. Especially foreign ones, because I want to know. So for example, earlier, someone brought up SAP. One of you guys is like, oh, I work in IT. Yeah, great company. We do work with them all the time. It's like, check. And also I know SAP as well, but I would want to know of people that are in those areas that do business with it, use it, etc. Because what I tend to find is there's a lot of like buzz, but if you like talk to people in those areas and they're like, yeah, I've never used it before, that's where I'm always like, huh? So those are the types of things that I would like want to ask questions and find out more about the actual company itself. So that's one that like I get it. I totally understand where you're coming from, but I'm still a little like hesitant. I'm always confused. How do people have 12-month price predictions while they do 5-year DCF? How does that work out? Would love your opinion. Sure. So whenever you do a DCF, whether it's a 5-year DCF or 10-year DCF, you're getting a valuation today. Now, the reality is the company is not at that value today. Ideally, it's going to be trading below whatever the intrinsic value calculated is. Now, it's based on future numbers. All right. So that's why it's a 12-month price target, because what's going to happen is every quarter you're going to update it. And obviously, as things change, new announcements, new results, new capital structure, that's when you're changing everything. So the idea is not like 12 months, like 365 days to the day. It's really like if it's not at the exact value, like when would it achieve that? It's going to take 12 months to achieve it. So it's always like this is a 12-month price target, but it could be a 5-year or a 10-year projections time frame. But that's what it ultimately is. Technically, it's the value as of today, but the thesis has to play out. So, for example, the most heavy weight that you have in terms of numbers is what they're going to do in the next 12 months. Obviously, as those quarters come out, all of those future numbers change. So that's why it's really a 12-month target, because you have the most confidence over like the next quarter and like the next several quarters. The least confidence you have is what's going to happen. That's why it's like you look at Nvidia. I mean, what's Nvidia going to do in 3 years? Like, who the hell knows? Yeah, they have contracts. Yeah, they're fully like booked through 2026. But after that, it's kind of like, once all the data centers are built and all the chips are there, then what? You're replacing the chips with better, faster chips? Like, are there just going to be like infinite data centers? I don't think so. So that's where it becomes like kind of difficult. The easiest companies to do a DCF on are like the most boring, simple companies like Verizon. You know, DCF on Verizon is like a joke. It grows at like 2 to 4% year over year on revenues, and every single number stays very consistent. Like EBITDA ranges from like 34.5% to 35.5% of revenues. It's like CapEx 14.5 to 15.5 as a percentage of revenues. So it's like it's a very tight grouping, but nobody cares about Verizon. It's not sexy. So the stocks that are more interesting are always the harder ones to value, for sure. Ever look at Elf Beauty? What is the one, not Elf? There was one that I think Buffett was in. This is driving me nuts. La, 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 la. I don't wear makeup, so I'm not really well versed, and I don't have a girlfriend, so I don't even have someone to like vouch for any makeup. Um, this is gonna drive me crazy. But there was another one. I'm gonna pull it up, and somebody's gonna come up with it in the chat while I'm thinking through it. It's not Avon products. They got bought out actually. No, Ulta. Thank you, Kyle. Sorry. Yes, Kyle, Nicholas. Thank you. Yeah, Ulta was one that like people talked about for a while, and that was really interesting. I haven't looked into Elf. Again, this is another one of those ones where I would like talk to chicks, see if they're into it. Like this is where like I would talk to like 10 women and be like, "Do you guys use this?" And they're like, "No." It's like, "Okay, not interested." It's like Sephora. You talk to chicks and you're like, "Oh, is Sephora?" And oh yeah, I love Sephora. Yeah, oh, okay, cool, interesting. Same thing with Ulta. Like when that came on the radar and people are like, "Check it out," I started talking to women. I'm like, "You guys in?" "Oh yeah, freaking love it. Go there with my girlfriend's." Like, "Okay, got it." But like again, this is another one that like I'm not a consumer of. It goes back to like the grab thing. It's like if I can't, vouch for it, so I'll listen to other people. It's not like I wouldn't be interested in buying it. But I would want some intel from basically their major consumers effectively. People could have made no EY buying military equipment and weapon manufacturing. Yes, yeah. You could make a lot in defense stocks. That is true. That one I can't figure out. Like, what war are they preparing for? It's just like so bizarre. Uh, is it true that the stock's market value is based on perceived value rather than actual value? No, it's based on actual value. So if you take all of the stocks that make up the Dow and the S&P, that's how you get like the market. So it's not the true market. You'd have to look at like the Wilshire 5000. Um, but what is it? There's like Vanguard total market. That's really what the total market is. But there's a ton of stocks in there that like nobody cares about and nobody buys. But yeah, if you think about it, if you assume that price is pretty close approximation of the true value, then yes. Now, um, price is what you pay, value is what you get. That's the old Warren Buffett value investing saying. And that came from Benjamin Graham, his mentor. So it's not a perfect approximation, but as long as stocks are presumed to be fairly valued, then it is the market. But the challenge is like the Dow is 30 stocks. The S&P is 500 stocks. Now it's the largest 500, the most important 500, blah, blah, blah. But like the total market is higher than that. So that's like the bulk of it. But the total market, let's go look it up. Look it up real time. What is the value of the total stock market? Let's see. 62.2 trillion for the US. And then let's see. What is the total value? So 62.2, remember that. And then I'm going to do S&P 500. Market value. So 62.2. The S&P is 57 point. Okay, so 57 is the S&P and the total market 62.2. So it's a difference of 5 trillion. Just so we're clear here. So the S&P is a pretty close approximation of the total market, but the total market 62.2, S&P 57. So it's pretty close. So 90% of the total market value is captured in the S&P. You're great, Ken. First time tuning into one of your live streams. Thanks, bro. Thank you for addressing all the questions. That's what I'm here for. I wish there were like more than like just the 10 of us or 17 of us. One day there will be, and you'll be like, I remember that guy, Ken. He answered all my questions. He was so cool. Now he doesn't answer any of my questions because there's 1,000 people on the live stream. But yeah, I think it's no surprise. I genuinely enjoy this. I could be watching Monday Night Football right now, but I'm not, because I'm a man of the people and I'm here for all of you. But I genuinely enjoy this. Like, I really am an actual college professor of finance and economics at Rutgers. So I do genuinely enjoy this, like rapping about this. And I think the other thing too is, if I can help you learn and, take some of my experience, help you guys out, amen. That's what I'm here for. Versus the typical like creator on YouTube that doesn't know their ear hole from a different hole when it comes to finance or economics or stocks, yet they have like 100,000 subscribers and they're talking about stocks. It's like, I still will never understand that from now until the day I die. Like, why does anybody listen to these people? It's madness. Like, I don't listen to people that carve pumpkins about brain surgery. I listen to brain surgeons. Like, it's just crazy to me. But to each his own. All kids I speak to tell me they pay Roblox. I think Roblox might be a good stock to buy, but it's too expensive for me. That one's come on the radar a bunch. I need to understand better, like, how they make money. Like, are you paying for like some sort of like cheat code or something like that? Because I know you do it like online and everything. I'm like an old PlayStation guy, like Madden and stuff like that. But like one of my students was telling me like FIFA, you can like pay to unlock players and uniforms and stuff like that. That was the whole like EA Sports buyout. I was like, okay, that's interesting. I didn't even freaking know that, to be quite honest with you. What is a value trap? Good question. It's cheap for a reason. So a value trap is where you buy something because it's cheap, but it's actually not worth it. So you could find something that's trading at a huge discount, but there's no future to it. So this is the old cigar butt that Charlie Munger always warned Warren Buffett about. When Charlie Munger first met Warren Buffett, he noticed that Warren Buffett invested like Benjamin Graham, who was his mentor. So what he did was he always tried to buy dollars for 50 cents. So if you think about it, if you buy a dollar for 50 cents, then, 50 cents goes to a dollar, you get 100% return. The issue that Charlie Munger had with that is these things were just like dogs. So if I, for example, if I said this bottle of Fiji, I think cost $2.50. If I said, I'll sell it to you, assuming that I didn't start drinking it, by the way. If I said, I'll sell it to you for $1.25, you're like, oh my gosh, I could buy a dollar for 50 cents. Yes, you could. So Warren Buffett would buy this and then sell it to somebody else for $2.50. Now, Charlie Munger, his whole premise is like, that's it. That's all you got. Like, why not buy something that's at a discount, but it's going to compound over time, like Coca-Cola. Coca-Cola is an interesting one. So Warren Buffett's original investment in Coca-Cola, he literally makes more on the dividend, the quarterly dividend from Coca-Cola than his original investment. Like, really wrap your head around that. That's insane. That's what Charlie Munger was talking about. Like, buy companies that have durable competitive advantages. So a value trap is like if you bought a typewriter company and you're like, Ken, I found this typewriter company. It's like, dude, nobody's buying typewriters. You're like, yeah, but it doesn't matter. I bought it for 20 cents on the dollar. It's like, okay, I don't know who's going to buy it. That's the key. That's the key. Can you give an overview of how you would go about valuing energy stocks for AI growth? Yeah, that's a tough one. Wanted to dive deeper into the sector and see if I can find a hidden gem. So, energy stocks typically are based on some underlying commodity. That's why you have to be careful with that. So, really great book, Value Investing from Graham to Buffett and Beyond. That's one. But another one is The New Buffettology by Mary Buffett. Mary Buffett is Warren Buffett's daughter-in-law. So in that book, they talk about ConocoPhillips, okay? So energy company, like ConocoPhillips, they have proven reserves. So they say so many barrels in the ground. It's like, we have land. We have proven that there's so many barrels under the ground. So what Warren Buffett did when he bought ConocoPhillips was he was like, so if I take all the barrels that are in the ground and I come up with a value per barrel, let's say $40 per barrel, I can buy the company today for half of what the proven reserves are. All right. And that, if you read the book, that's basically the logic that he gave. That is how you want to think about energy companies. Now, there's some energy companies, exploration companies, that you have to be very careful with. Okay. There are some companies that just do like the actual drilling, like they don't own the land and stuff like that. They just do the drilling. So their cost, okay, their cost is very high. And what literally happens is they stop drilling when oil goes below typically like 50, 55 a barrel. And then when it goes above, they start it back up again. Those are the ones that you have to be very careful with. You want companies that are like fully integrated, that have the actual reserves themselves and can drill it and can sell it. So you want like fully integrated across the entire one. I think for those of you who are interested in the energy play, okay, for AI data centers, follow what I'm about to say, friends. LNG, liquefied natural gas. All of these data centers, there's not going to be enough water, electricity, etc. So they're going to have to use generators, and they're going to power the generators with gas. Okay, so that's Ken's little prediction there. So look at LNG firms. I think that would be your best play. That would be your best play, I would say. Oh, here's a tough one. Who do you think's winning the Super Bowl this year? That's a really tough one. That's a tough question. I'm going to say not Kansas City. And now that I said that, they'll win. Denver's very interesting play. I don't mean to jinx them, but they're a very interesting play. You need the defense. So That's the one that I would say it really intrigues me. I mean, they beat both the Super Bowl participants from last year. They beat the Chiefs and the Eagles, but they're kind of like inconsistent with their play. I would say I'll go with the Broncos. I'll go with the Broncos. What happens when companies aggressively buy back their shares and want to take the company private? Would I be forced to sell my shares at the market price? Yeah, you would basically be given whatever the cash value is, it would just be deposited in your account. So if you were like, I'm not participating, that's what would happen. Yes. So if you think they're going to go private, whatever they go private at, that's what you would be bought out at. So where you'd have to be careful is if you overpaid for the stock, then you could get a lower price than what you paid. But outside of that, like you can't stay with the company when they go private. You'd be taken out. Da-da. Is Celsius slowish international expansion adoption any red flags? No, it's actually a positive. Is it fair to think that in this stage we should be seeing a much higher percentage growth in international markets? I mean, the international growth is like 27%. It's only 3% of the overall revenue. I don't think you'd see much higher than that. I mean, they haven't even really gone deep into international markets. We have some international friends here. I mean, they've been in like the Scandinavian countries, but they really haven't gone like bonkers yet internationally. Like that is one of the areas that I think is a huge opportunity area for them. 100%. I think that that's like really, really a potential huge opportunity for them. But no red flag there. The red flag was like the organic growth, but I don't even think that's a red flag personally. What's your take on PayPal? Yeah, PayPal's so frustrating. Yeah, you and me both. I can't find any news on it either. PayPal is one that's very frustrating because I don't know if it's like shiny object syndrome where everybody's like AI, 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 and PayPal is just like undervalued, crushing it, good numbers, buyback, dividend. So it's like, oh, once they announce a dividend, they do that, and it's like, yep, it's just something weird there. There's like a lid on it. That's one of those ones where it's just one day, like one quarter when they report, it's just gonna rip. Alibaba had that happen to them for a while where there was just like a lid on the stock and everybody was like crapping all over it and then it just ripped. So it just needs a catalyst. There's nothing that you're missing. There's nothing that you're missing there. That one's just baffling. So yeah, that one's just bizarre. Can't really figure it out, honestly. Um, yeah, Jeff, you're reading my mind, dude. I'm ready to cut out. I didn't realize we've been together 2 hours and 3 minutes, friends. 2 hours and 3 minutes. Yeah, I think the dividends are probably going to help with PayPal for sure. But yeah, Jeff actually gave me the reminder. I'm like, why am I feeling tired? Because we've been here for 2 hours and 3 minutes. So here's what we're going to do, guys. I'm going to cut it here. All right. Appreciate all of you participating in the live stream. Pop your comments into all the different videos and stuff. I'll obviously keep track, respond, etc. We'll be back same time next week. So definitely show up. Tell your friends, tell your family, tell people, subscribe to the channel. That's the only way that we grow. We're at 12,100. Hopefully we can get to 100,000 at some point, and we will with due time. But thanks everybody. This was actually a really, really good sesh. A lot of great comments back and forth in the chat. Super appreciative of that. And I will see you guys same time next week. Have an awesome week and weekend, everybody. Later.